All right, folks, breaking news just coming across Bloomberg just now, about 30 seconds ago. The Supreme Court has announced that they are rejecting Biden's student loan forgiveness plan. So basically, those students, those individuals will have to start to repay their student loans. And there won't be any forgiveness or, throttle back on what they actually owe. It's sounding like right now. So I had actually recorded this video probably about 30 minutes ago, prior to that news coming out, because I had some charts I wanted to share with you. I hadn't gone through these charts in a while with you folks, so I want to give you an update. But this new news 30 seconds ago really plays a role into the narrative of those charts. So let's get into it. And let me share with you these charts, and you're going to see how it all ties together here, right? So this is the Federal Reserve chart showing the 10-year Treasury minus the 2-year, known as the 210 spread or the 10-2 spread. And so what we can see, let me close this other thing so I can see my whole window here. What we can see here is anytime you go negative, right? This is zero. So anytime you go beyond dip into that negative territory, we see that we've had a recession. So here we went negative and we had a recession. Again, we went negative, recession. We went negative territory, recession, same here. Same here. We just dipped below the line. And then COVID, we had touched a line and had a little bit of a recession there. We know there was a whole bunch of backstop from the Federal Reserve and the federal government. So anyway, what that shows is here we are, very much in negative territory, right? We can clearly see that. And we can clearly see that in terms of, we haven't seen that since the 1980s, right? So it's been a long time we've been this negative as far as this historical chart. So coming back to the Biden student loan forgiveness plan that he had that was just rejected by the Supreme Court. Basically, what ends up happening because of that Supreme Court decision, those students, those individuals don't have that money in their pocket like they thought they were going to. So they are going to have to pay those loans. They're not going to be able to buy a new iPhone, buy a new car, buy, more consumerism, basically. And that will, as a result, will potentially, most likely, further slow down the economy and make this chart, more accurate in terms of predicting a recession because of that slowdown in spending. Okay. The other thing I wanted to point out in this chart, which I found interesting, one of the reasons why I did this video 30 minutes ago is because I noticed looking at this chart every time, there was a dip down, say here, we dipped down, we went negative, then there was what many of us know as a dead cat bounce. It went back up. It achieved a higher point, but that was a false indication, right? That dead cat bounce. It ultimately ended up going more negative into this territory, and it seems to do that quite often right before a recession, right? We had a negative point here, then there was this dead cat bounce up to a higher point, and ultimately we ended up lower going into this recession, right? We see that, quite a bit in this chart. So, we have it again here. We went negative, we had a dead cat bounce right up here, then we ended up going lower to this point, petering out, going into a recession. We had a low, then we had a high, and then we ended up going lower, kind of petering out at that level and going even lower into a recession. So, the reason why I bring that up is because the same thing is happening all over again. And so, if I was to zoom in zoom in on this this period of time here that we're going through today. Bring up my pen again here. We see the same thing happening again. Overall, the trend is negative, right? You see that clearly. We ended up going low here. Then we had this dead cat bounce. We went low, dead cat bounce. We petered out a little bit, but now we're going lower, right? So it's not a good trend that we want to see for sure. So I just wanted to bring that to your attention of, kind of where we are in the in just the historical perspective of things when it comes to this chart, with us being this negative. The other chart I want to share with you is the government's income, basically, is what it comes down to. They call it the federal government current receipts. And again, let me just bring up my pen here. So this is basically the income of the government, like your paycheck. When you bring it home, that's the income you put into your bank account, you spend. Same deal here. And what we see here is basically, again, you see these points where the income is going up, it levels off, right? And we get into this period of a recession right here, right? This bar here, this gray band. If you're not familiar with these charts, the gray bands are the recessionary periods of time. Again, income is going up and then it peters out. It goes across level during this recessionary period. Here we're going up. We actually take a little bit of a U-turn here and we go into recession here right during the before the global financial crisis, the GFC in 2008. We were going higher, then we took this U-turn, right? And we ended up into a recession. And again, we see that happening here right now. And that's why I wanted to show you these charts is, this U-turn is very dramatic up here that we're seeing today. This is huge, right? So it looks very similar to 2008. And so I just want to, again, just point out this historical chart. I'm not saying we are going into a recession. All I'm doing is I'm looking at the data, the historical data. I'm looking at this, this Supreme Court ruling that just came out 30 seconds ago. I'm looking at all this and I'm saying, which way are we going? Okay. So let me share with you another chart. This is bank loans. And again, another way for us to look at whether a recession is on our doorstep. So again, commercial lending is on the rise, then it levels off. We're in this recessionary band here. Again, commercial lending is on the rise, then it, actually decreases. We had this recessionary period. We're on a rise here. Actually, the recession started before bank lending rolled over, right? But you can still see, that, I think the banks were behind the curve here. Maybe they weren't wanting to believe the data. But whatever the situation was, bank lending did come off of its highs during that recessionary period. COVID, at this point in time, obviously with all the factors we know about, we saw the bank lending come off its highs. And so, I bring this up because look at what's happening today. We see bank lending on a downtrend, right? We see bank lending on a downtrend. And I'm not saying, again, that that's going to be a predictor of a recession. It's just a data point, right? One more data point that I'm trying to share and point out to folks so they, can make their own decision. Here's another chart I haven't showed you folks in a while. This is the Atlanta Fed comes out with this chart, and it's their prediction of where the GDP forecast is. And so they look at it and they're basically saying, they're this green portion up here. They're saying we're kind of, range bound in the, 2% GDP range, whereas, the blue chips are basically saying, they're not even seeing us hitting a 1% GDP. And I'm more along, in the blue chip court, saying we're not going to achieve a 1% GDP. Again, I look back at all the data, I look back at the Supreme Court ruling, and it all kind of makes sense, right? You see how this all ties together. Okay, and let's take a look at one more chart. I don't think I've shared this chart with you folks before, but again, it pretty much paints the same story. We look at where we are today in time, and we see, in late 2022, early 23, we had a very high income growth. This is the wage income growth tracker that the Federal Reserve Bank of Atlanta puts together. And we've had a high here in late 2022 of wage growth. But what's been happening recently? It's been on a downtrend. Now, wage growth is still growing. It's just not growing as fast as it has been, right? You look at this growth here, from late, 2021, wage growth was on a rocket ship going north, right? But now it's turned a corner. And again, look at history. Back here in the early 2000s, we had wage growth, but then it rolled over, right? And what happened? We had a period of a recession. Same thing here. We had wage growth, but then wage growth rolled over and we had a recession, right? So I'm not saying these charts are, forecast things completely, because we are in a highly manipulated economy. We know that with the Federal Reserve. We know that with the Treasury. Things are just don't really act in a free market kind of way. We know that. So we need to look at these charts for the historical perspective. We need to look at these Supreme Court rulings to see what's going on, to be able to help us, make a decision in our own mind whether the recession is on our doorstep or not. So looking at that, and I'm not here to preach doom and gloom. I want to show you those charts so you can kind of get some data from there. Then I would encourage you to go to my website. I just put out a blog, I don't know, a couple of weeks ago about why recessions don't matter anymore. Okay. And it's the counter argument of why we may possibly not have a recession, right? So here I am, sharing two different data points. So I encourage you to go to that blog. I'll put the link in the video here. Go to the blog, read the article, and then formulate your own decision. Okay, that's my goal here, to help folks think through this, to help folks see both sides of this coin, and in their own way make a make a thesis of their own, and take action wherever they see they need to take action. So, all right, folks, I hope this helped in some way. God bless and have a great day. Thank you.